Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. Our top stories today: a cautious open for Asian stocks in a historically volatile month for equity markets. Traders, of course, counting down to a likely Fed rate cuts, with Friday's payrolls report the next key macro milestone. Now, China's Caixin factory PMI in focus this hour after the official gauge actually contracted for a fourth straight month. The latest sign that this year's growth target remains at risk. And New World Development is a stock we'll be tracking very closely at the opening bell here in Hong Kong after the company warned of its first annual loss in 20 years.
All right, we got through the month and we're balancing flows. You got through NVIDIA earnings. You got through core PC inflation in the U.S. without much trouble, but we're all bracing for a pretty volatile week. In fact, the end of it really marked by that U.S. jobs report, perhaps one of the most anticipated data points for some time now. So certainly that's one to watch here. That's why we're a bit cautious on this Monday morning. We also have to deal with that China PMI data that we got over the weekend as well. A fourth straight month of contraction in the manufacturing side of things. You are starting to see that being felt across iron ore markets as well. You take a look at how we're dealing in Singapore. We're down about 0.7%. You're already seeing it across steel futures in China. Dalian futures of iron ore down 1.5%. And oil markets extending that drop that we saw on Friday of more than 2%. There's signs that maybe OPEC Plus might actually talk about that output boost or at least stay along that path. Also, these China woes that are weighing on crude markets here this morning. Equity markets are pretty mixed right now. Taiwan's just coming online. We're seeing still some upside there in Taipei at 0.7%. We're pretty flat, though, on the benchmark for Asia is concerned. U.S. futures are also pretty flat. The dollar is also pretty flat as well. And we're talking about a little bit of pullback, though, when it comes to the euro as well as the Japanese yen this morning. Keep in mind, Treasury markets are closed globally because of the U.S. Labor Day holiday, so we're not seeing that in Japan this morning, but yields are overall taking slightly higher this morning. Take a look when it comes to the Golden Dragon. This is what happened on Friday, but yes, as Dave mentioned, there's a lot to digest, whether it's what we saw, Macau gaming revenue, whether it was the property earnings that we saw, the banks and everything. So there's a lot on tap here, and not just the property developers in China. We're talking about Hong Kong too, Dave.
Yeah, on the back of that, the profit warning coming out of New World Development. In fact, on that very note, when you look at the group today, that's really not just one stock. One group will be tracking very closely going into the open. I mean, we're trading almost at still GFC lows on the Hang Seng Property Index. We're trading, I think, at 35% net liquidation value. So it's not as if these stocks aren't cheap. They could get cheaper, and really on the back of, we now understand how large impairment costs and charges can be because of what New World told us. So that's really one group we're tracking. Vanco reported earnings too. And we also had the monthly numbers, as Yvonne is pointing out, for Chinese property. Autos, well, a couple of things. You had some earnings coming through, plus, of course, the monthly data delivery. So BYD, Geely, Great Wall, and all the other OEMs reported some August numbers out on the weekend. And tech. Why tech? Well, you had a big pop on Friday, but as Yvonne is pointing out, there's a lot that happened from Friday going into this morning. So, yeah, this next 60 minutes is going to be extremely busy and manic.
Yeah, let's start with the data first as well. China's economic headwinds are mounting, with factory and housing data painting a bleaker picture. That 49.1 print for manufacturing, in fact, was weaker than it was expected as well. We marked as the fourth straight contraction. Let's get to Min Min Lo, our China correspondent. She's here with us. And what do these PMI numbers tell us?
Yeah, as you mentioned, fourth straight month of contraction. And if you look back to April of 2023, we've only seen 3 out of the 17 months so far seeing an expansion in manufacturing. The government is blaming this on hot temperatures and heavy rainfall. But our Bloomberg economics team believe that there is still some other more troubling factors at play. The services data, though, is slightly surprising to the upside. 50.3 is the actual number. The survey number was 50. 50.1. The prior month was 50.2. Take a look at what Bloomberg Economics team said, that there are more troubling factors at play. And if you look at reports, we're seeing that local governments are struggling with a heavy government debt. And so that's why we're seeing the stimulus perhaps losing a bit of traction. If you peel back the numbers for the services PMI, construction data was slipping as well. It's the weakest number we've seen since February of 2020. That means building activity is slowing down, and perhaps some of the weakness in government spending as well, which has been that key lever to really lift the economy given the very slow domestic consumption right now. But Goldman had written that so far the revenue from taxes and land sales may not be able to meet the projected budget this year, and so that could weigh on government spending going forward.
Now, the housing sector, so there are lots of major pieces of news going into today, right? So Friday, we were all here in the newsroom when that scoop broke on China might be looking to consider refinancing $5.5 trillion. And then on the weekend, the acceleration in the slump in housing prices. So the approach today is fairly complicated.
Yeah, so the preliminary data we got for August showed that there is a slump of about 26 to 27% for home sales. That's bigger than the decline in July, which is close to 20%. And in some ways, I would say this is not really unexpected because we had seen those at least 10 cities scrapping or removing those new home price guidances to let market prices set the price. And that has led to a lot of developers slashing prices to attract home buyers. And understandably, some home buyers are now sitting on the sidelines waiting for the prices to bottom out. So we are seeing sales not doing so well in August. But as you said, the government, we reported previously that they're considering allowing this refinancing of mortgages, about $5.5 trillion worth of them. But this is really equivalent to a mortgage rate cut, which the PBOC has introduced in the second half of last year as well. That hasn't really moved the needle very much for the housing sector. So our Bloomberg Economics team was saying that, maybe the government is running out of policies to be able to rescue the housing sector.
Min Lo, thank you so much. Getting us up to speed here as we get warmed up for the Monday session, just 23 minutes away. Joining us here in set, Hao Hong, partner and chief economist at Grow Investment Group, to also help us understand where we are in this recovery story. Is there a problem with the transmission of economic policy, whether that's fiscal or stimulus?
Yeah. Well, I think there's a huge problem. I think by now everybody recognizes that. Much of the rate cuts, much of the triple R cuts, and also the relaxation of the property sector doesn't help so far. So I think, going forward, besides physical expansion, monetary easing, I think, the government needs to do substantially more to boost the confidence in the sector. Just now, Min Lo mentioned that, property sales in August is still plunging, right? So it's actually accelerating from July. And I think it's not a matter of, whether people have the demand for housing, because many of the people are still living in apartments that is like decades old. Right, so there's a substantial need for upgrade. But then at the same time, most people were waiting for further price decline. Right, so right now, prices already declined maybe by almost 1/3, and most people were expecting actually further price decline, and that's why people are waiting rather than forking out money to buy properties.
And you're seeing this kind of downward spiral, right? If you can't stabilize the property market, that's going to impact the job market, consumption, household wealth. What breaks the cycle then?
Yeah, it's dragging everything down. I think right now, I think most people recognize that it's a structural issue. So I think this is one of the reasons why the government is hesitant to roll out sort of stimulus. Because at this stage, it's not about a cyclical recovery. It's something structural that is happening in the economy.
Okay, well, if I could ask our producers to bring up chart number 40, the private economists have. I think the current consensus now for growth is 4.8%.
Right.
I think at best that went up to 5% to match the government target.
Right.
It's since been revised lower. Is China at risk of not meeting its growth target, or is 0.2% a gap that's easily closed if indeed they introduce more stimulus?
Yeah, well, I think by now the third quarter is not looking great, right? So I think fourth quarter, if you do nothing, then it's probably going to decelerate further from here, because of the seasonality. In the winter season, people tend to work less, et cetera, et cetera. So I wouldn't be surprised to see, if we don't do anything, then, fourth quarter is going to be even worse than the third quarter. But then by now, if you look at the fiscal expansion schedule, right? So in the first half of the year, we actually issue less government bonds than last year. So the pace is actually slower. And then in the second half, we were hoping for a pickup, right? So there is a slight pickup in bond issuance pace, but then it's far from being enough, right? Far from being aggressive. So I think, a lot more needs to be done to reverse, this downtrend.
Yeah, given the lack of domestic demand, given you're just also seeing persistent buildup in excess capacity, I'm just wondering, is there a risk that China falls back into deflation and that there is some sense that deflation is still entrenched in the economy?
Yeah, I think some will argue that we've been in deflation for a long time now, right? So if you look at the upstream sector, we've been in deflation territory for almost 2 years now. And I think, in the downstream, we're not seeing any inflationary pressure. I mean, if you look at the PMI index, in the sub-index, if you look at the output price part, it's actually firmly in a deflationary trend. So that is telling us that, something drastic needs to be done for the economy.
Such as?
Such as, for example...
Or what's realistic to expect?
Well, in the near term, people have been arguing for, consumption coupon, cash out and stuff.
Yeah.
We know that it's going to change the secular picture at this stage, but then at the same time, it's going to help or cushion some of the downside to a certain extent. I think, you can help university graduates to find jobs, which is a huge problem, huge overhang in the economy. I think, you should mobilize the government's finances to buy unsold homes as, some of inventory to provide economic housing for people. There are many things that can be done to change the expectation. I would even argue that, you don't have to see the number starting to improve for the economy to do better or for the confidence to come back. All you have to do, is to reinstill, some of the confidence back into the economy. Let people see hope. How we resolve the housing problem and how we resolve the unemployment situation.
In fact, I think to underscore the point, the most recent example of that was last Friday when this news broke that China was considering refinancing $5.5 trillion. I mean, property stocks were up 30% in some cases, right? Which takes us into Monday. Where do you think the market goes short term this week? What does this week look like?
I think, last Friday's rebound could be a short covering rally as well, because in September 2023, we did more or less the same thing. But then, the rally sort of has been fleeting back then. So I wouldn't be surprised to see, because people has been paying down their loans rather than refinancing. And people has been, sort of trying to move out of mortgage rather than, continue to have a mortgage outstanding. And also, because home price has been declining, right? So for the existing home that is outstanding, your equity portion of the loan is actually decreasing as well. So you probably have to top up first. You top up your home equity first before you can refinance your loan. So I would say that it's a good initiative. It's helping. It gives people some hope. But then at the same time, the effectiveness remains to be seen.
Hold that thought. We'll have more from Hao Hong, partner and chief economist at Grow Investment Group. Still ahead, we're going to speak to one of China's largest asset managers as pressures on the economy and markets continue to mount. Noah Holdings CFO Grant Pan joins us later on this hour.
Plus, China's demographic challenges, a closer look at some of the socioeconomic impact here of the falling birth rate and also this aging population and how the healthcare system is not just coping but looking to leverage on these secular trends. Counting down to the open of trade, 17 minutes away, the opening bell, Shanghai, Shenzhen, and here in Hong Kong. This is The China Show. Good morning. Right, welcome back to shows. The opening bell, 14 minutes away. We're just about, we just have the renminbi fix of the day. It's out. And of course, just keep in mind, the fix has come in on the weaker side of estimates because of this drop in the U.S. dollar. We're getting the one for the day at 710.27. I wouldn't say on the weaker side, but slightly in line, more in line with estimates of 7.10.35. In about 30 minutes from now, we'll be getting the Caixin numbers coming out, and of course on the back of the weaker PMI numbers, which we got on Saturday morning.
Yep, and we're looking at New World right now, indicated about more than 4% lower today. So certainly on the back of what we heard, that profit warning, and really talking about how one of the worst profit warnings we've seen in, 2 decades for the developer as well. Still with us is Hao Hong, partner and chief economist at Grow Investment Group. We talk about this renminbi breaking below 710. There has been this rotation back into Asia FX, including the renminbi. How real is this trend strength, do you think?
Actually, I think the RMB may have some staying power. Like the strength may have some staying power. The reason being, the Chinese exporters has been retaining their U.S. dollar profits overseas, right? To buy, for example, Mag 7. It's unproven. It's a hypothesis. But then, I wouldn't be surprised to see some of the money that has been retained overseas has been put back into the U.S. market. And that is the reason why, as the U.S. Fed raising interest rate in the past 2 years, the Chinese currency continued to depreciate, and then the U.S. market remained resilient, or actually become one of the best performing markets in the world. And I think the reason being all the capital flow, including money from China, from the Chinese exporters, has been going into the U.S. market.
How much money are we talking about here? I mean, we've seen a lot of numbers on...
A trillion?
A trillion about to come back. Yeah.
Well, if you look at the trade surplus and the current account surplus, the difference, right, that's about more than $1 trillion cumulatively. So I would say that at least
sitting in dollar investments.
Yeah, that's right. So at least a couple of $100 billion would be going into the U.S. market. And these days, if you travel in China, you talk to investors. One of the biggest questions they ask is how to put their money to work to overseas market. Because people sort of given up on the domestic Chinese market.
But the fundamentals still suggest that the currency should be weaker, right? And we're heading into a U.S. election where there's plenty of risk there as well. I mean, how long do you think the strength can last?
Yeah, I think, the exports from China could get hit, right? But I think, in the near term, currency movement is all about, the interest rate differential and also all about expectation of return, right? So if we can improve, for example, if the expectation for the Chinese yuan is appreciating against the U.S. dollars, and also, the capital flow is actually coming back this way, because the U.S. Fed is lowering interest rate, then I wouldn't be surprised to see the Chinese yuan have the strength has some staying power. And then at the same time, I would argue that, the Chinese market is probably the payoff is one of the most skewed market in the world, in the sense that, if you look at the downside of the market, right? So it's sitting at multi-year low, right? In terms of valuation, capital flow, capital is flowing out actually, in terms of interest rate, in terms of the expectation of coming policy stimulus, right? So you can see that, the downside is not nearly as big as the upside, right? So now we're waiting for some sort of catalyst, to ignite this rally.
Yeah.
I mean, to some extent, if you had to pick a winner within the greater Chinese equity complex, it's the Hang Seng Index, at least compared to the CSI 300. I think we've outperformed, the HSI has outperformed the CSI for 6 straight weeks.
That's right.
And we could actually see that go a 7th week. There's nothing that indicates that stops. Do you expect that trend to continue? Why is the HSI outperforming? Yeah,
well, I think, in terms of valuation, it's cheaper. It's easier for foreign capital flows to come back this way. And historically, the Hong Kong market has been showing off higher beta than the domestic Chinese market. I think also at the same time, most of the Chinese tech company that is, generating huge cash flow is trading in Hong Kong. And many of the leading Chinese internet platforms is trading at cash or, 2 times cash, right? So the math is very easy to figure out, right? So it's basically waiting for a sparkle, to ignite the rally.
So what's worth holding in this equity market right now?
I think, just now we mentioned that, because the payoff is very skewed, right? So for us as a trader or as an investor, you really want to structure your portfolio in a skewed way as well, using some of the financial derivative, right? So to cushion your downside while maintaining the upside, et cetera, et cetera. So then that way, even though we are not exactly sure the timing of this rebound, but then at the same time we position ourselves, towards this, expected rebound once the Fed's starting to cut.
I mean, there have been some I want to get your thoughts first on what you make of the earnings season so far. And I think one of the stocks that really caught the attention of people was, I think, PDD, Pinduoduo, which is one of the better positioned companies. But when we got a slight warning, the stock was sold off 30%. So what do you make of that dynamic so far?
Maybe I'll just comment on the general.
On the sector, yes. The sector and sentiment in the market that allows that thing to happen.
One of the sort of macro trend in China is the consumption downgrade, right? So people are actually opting for less expensive stuff, and all the luxury goods are getting, retailers are getting hit. For example, LVMH, Prada, you can see the stock prices off, 1/3, to 40%. Right, so it's telling you that, people in China are trying to save and not spending as much. Right, so I think as a result, in this part of the world, there are a handful of stocks that is beautifully positioned, for a consumption downgrade trend, right? And that really explains why, the earnings from these stocks has been so strong. But then at the same time, because, there ain't that much to choose from. And also, because of, the sort of the urge not to be, the richest guy in China. And therefore, stock got really hit. So it's very difficult to explain, because this is behavioral finance category. So, but one can say that, because the consumption downgrade is still ongoing, and therefore in the handful of stocks there's position for this kind of macro theme.
Very complicated, and to your point, behavioral finance gets into a lot of things. Hao Hong, thank you so much for joining us here, Partner, Chief Economist in Growth Investment Group. In fact, you can hear more on some of those deeper issues. Hao Hong was our guest on the Tiger Money podcast, and the latest episode drops, of course, on Tuesday. Catch that, of course, on those platforms, on your screens, Bloomberg.com, Apple, Spotify, and YouTube, with fresh editions, of course, every second Tuesday.
Yep, we're watching, of course, Hong Kong property. New World is certainly the big one in focus here today after that profit warning, talking about a potential loss of 19 to 20 billion Hong Kong dollars for the fiscal 2024 year. You're seeing the shares down close to 4%. It is dragging some of these other developers in Hong Kong lower here this morning. And also take a look at how this is going to impact the Hang Seng. And talk about how we've been on a pretty good performance against the CSI 300 here. And we'll see how that fares today. This is Bloomberg.
Okay, welcome back to shows here. So we're just about done with earnings season. We have handful more, but the bulk of the big names have reported, and hence we're getting, of course, some updates from analysts here. ICBC, SAIC out with earnings, of course, last week, and we'll unpack, of course, the banking earnings in a moment, but this is the latest here. A50 futures pointing down 0.6%.
Yep, we're talking about some stocks to focus, not just when it comes to the banking sector, but it's property, not just in China, but also in Hong Kong. Newer development, there you go. We're talking about to fall about 4% on that expected annual loss, and we're watching very closely China Wanke as well. In fact, when they came to those earnings, first half-year loss in more than 2 decades. EV stocks in focus as well. We got some delivery numbers out of the likes of BYD, NIO as well. And we are seeing a mixed picture, but XPeng is up 1%, NIO down some 4%. The open is next. This is Bloomberg. Welcome back. You're watching the China Show. We're counting out the open of markets. Of course, we've been talking about that PMI data that seems to be really weighing on investor sentiment here this morning. And the 4th straight contraction we've seen in the manufacturing sector. So you're seeing the Hang Seng in the pre-market down about 0.7%. Looks like they could be likely to snap out of this 4-week winning streak that we've seen among Hong Kong stocks. And I think 6 weeks, you say, Dave, of outperforming the CSI 300. But yes, it continues to be the macro picture that is looking pretty weak still.
It does. And, we did get that initial move up and that cheer, of course, into month end on Friday. And then you had that news, of course, of China looking to maybe allow the refinancing of some of these mortgages. So you had it pop very briefly above 18,000 in the Hang Seng Index. And as you can see now, we're about 126 points to the downside right now. The big one, of course, this week will be the jobs report. Stay tuned for that. Will that cement a 25, or are we again going to be entertaining the possibility of a 50 cut out of the Fed this week. Have a look at the open where we are, 0.5% to the downside. As you can see, that's quite a big drop, actually. Okay, 3,300 is very much going to be in focus here. In 15 minutes or so, the Caixin numbers are coming out. Let's see what that looks like as far as the big picture context is concerned. Following, I think, 49.1 on the key gauge out on the weekend here. The open in Hong Kong is looking like this. And while you look at this as well, something to keep in mind, just two things, right? Banking earnings. And so this week, we actually have weekly options starting to trade on the Hang Seng Tech Index, right? So that's another instrument that I guess investors can latch onto as well. Broad weakness across the big large cap stocks on your screens. We are up 4 weeks, up, as Yvonne is pointing at, 6 weeks relatively against the Hang Seng, the CSI 300. Okay, here's your big one. So in case you missed it, New World Development warned of its first loss in 2 decades. Impairment charges are, that's 8% down in the opening minutes. And we're looking at that from a broadly industry perspective, what that might mean for the other developers here, which we're not really seeing that big of a decline in those stocks. But it really, what that means as far as impairment charges go, some of the assets that these developers bought a few years back, given the price declines, might not be worth as much as those, if you sort of mark to market in some sense right now. Right. Flip the boards. China property, Vanke, monthly earnings, monthly sales numbers, plus the monthly sales from some of these automakers in focus too. So Great Wall's down about 1.5%, and China Vanke's down about 4% in the early going. So we effectively swung from a 9.9 billion profit this time last year to a 9.9 billion loss for the first half of this. Unsurprising, but given, of course, also the declines we've seen so far in the monthly sales numbers, it seems like the losses or the sales are still accelerating to the downside.
And getting worse as well. Minden was just talking about earlier as well. So we're still not seeing any sort of relief in the property market, and those earnings are really showing that in some cases. What does it mean when it comes to some of these big asset managers in China? We're talking to now one of the largest NOAA Holdings did see revenues decline in the second quarter. You take a look at how things were broken down. It seems like whether it was the mainland China and the overseas business did still see some weakness in the second quarter. Here with us now is NOAA Holdings CFO Grant Pan. Grant, it's great to have you. Thank you so much for joining us, and thanks for the time. It was a tough quarter.
Yes.
Are you seeing signs of a meaningful turnaround?
Sure, of course. We actually are still very confident with the growth of our potential target market, which is the high net worth individuals in mainland China. Either they're still continuing with, one thing about China entrepreneurs, which majority of our client bases is, the last thing they do is so-called tangping or lying flat. So they always look for new market, new opportunities. We believe they're actually undergoing a true phase of globalization, which is differentiated from the first stage of export, made in China. And the second phase is more or less a outbound M&A effort to grow their home market. But the third phase really started a couple of years ago. We're seeing them sending, senior management members to really explore and really spend a lot of time on overseas markets. So we believe they'll find new markets and also find, again, the growth engine start running within a very short time frame. But obviously, being a wealth management company, I think we're always trying to provide solution for clients to overcome, especially like, lower performance on a single asset class. So it's not always looking for the best return on a single asset class, but rather we're providing a more comprehensive solution to really manage their wealth. Wealth management, by its first original meaning, is to manage their life stage. So especially when there's so much volatility, especially on real estate, where especially China high net worth individuals or residents, they choose to actually put property as the very first option to allocate to in the past,
right,
as a wealth management solution. Now they actually needed a more comprehensive solution.
And the sense you get, given the challenging backdrop, right, whether that's a weak onshore equity market or weak onshore property market, are you seeing more of your clients now wanting to diversify currently away from onshore? Is that the flow of direction of money?
I think the group of our clients actually are pretty representative of what had been the process of accumulating wealth in the past 40 years of opening up. So many of them actually are putting their growth of operations of businesses ahead of personal wealth management. So usually their wealth management strategy follows where their operations will go. So in that sense, when they're seeing actually a slower, obviously domestic market for their own business, they will actually naturally look for new territories around the globe where for us, the strategies really follow where their future accumulation of wealth.
And where are those markets now that you're eyeing?
We're actually, Hong Kong is obviously being the very natural first stop for many entrepreneurs. We actually did a survey of the clients where they wanted to go in terms of global expansion. Actually, many non-financial factors come into play. The very first one is actually Chinese stomach. They actually they care a lot about whether or not that destination provides enough Chinese food. Because Chinese people really care a lot about...
I think we have that in Hong Kong.
Yeah.
So Hong Kong is a winner, obviously.
Yeah.
And two is Chinese language. How quickly they could understand. Singapore actually comes in with very good Mandarin-speaking environment. But surprisingly, Japan is also a very good choice for most Chinese people. They say, even if I don't speak Japanese, but I read the road signs, I won't get lost.
Yeah. And there's rice too, right?
You can get a little bit,
Rice is life, right? Rice is life. Okay, so what are your priorities for the business? On one hand, I guess the question is, short term, do you think the trends you're seeing among wealth clients looking outside, do you think that's cyclical or structural? And how are you pivoting your business now, given an answer to that question?
Yeah, obviously we're trying to be where our clients is going to be in the next stage of globalization. So Hong Kong is being basically our main flagship in the globalization effort. So we have over 300 employees here, grew almost, I would say, 50% from last year. And we have another 100 around the globe where we have Singapore, which is going to be our future global holding structure, and also obviously has its own wealth management team. We have two teams in the States. One is in Silicon Valley, very close to where the AI technology is, to provide, obviously technology investments for our clients. Another in New York, opening up one actually in Irvine, Los Angeles, a year ago. And we're looking at destinations like Tokyo and potentially Dubai as well.
Beyond just headcount and setting up office, I mean, is there more that you can do to enhance your competitive edge in these foreign markets, and maybe a wider GP sort of coverage as well?
Sure. I think one of the advantages that we have is the very strong and unique bond with top GPs around the world. I think many GPs are stressing this year especially to increase the ratio of retail LPs in their asset management structure. And obviously NOAA is still probably one of the very few left that has access to the real qualified investor groups in China. And we just realized actually many of them already, they're either outbound in terms of globalization, or many of them already have established businesses around the world. There's still not too many institutions focusing on connecting these Chinese entrepreneurs. We actually have a pretty clear client segmentations. We serve mostly Mandarin-speaking, Chinese-speaking clients because of the natural connection in culture, and you know how it's important to build trust with your clients. So culture obviously matters quite a bit.
I need to ask you before you go as a final question, the 50 million buyback.
Yes.
Was that something because you thought the stock was undervalued, and investors can get spoiled, and they're going to go, okay, are you going to give me another one of this in the next reporting season?
Sure. Yeah, it's definitely a very a vote of confidence by management itself. We believe it's undervalued because it seems there's the valuation actually is a little bit off the fundamentals of how the company performs.
Right.
We actually have very deep reserve capital, and I want to make sure one is obviously to hopefully to get the stock back to a fair value, and two is really to reward many loyal investors who's been with us. Actually, many of them been with us more than a decade.
Where do you think fair value is for the stock? Let me poke you there.
I think it's at least twice the net assets of what we have. Now we're actually under cash value, so we're trying to bring it back to the right value.
How are you looking at, when it comes to wealth management products in particular? I mean, do you think that relationship with regulators, is that something that we've seen? Obviously, we've seen the regulator really crack down on maybe some of these products and even parts of the financial world right now. What do you make of that relationship now?
I think it's we always want the regulators to be, obviously strict and fair. I think it's actually an advantage to players like us who've been staying compliant from the very first minute. We actually implemented very fundamental rules when we actually were founded, that we have no capital pools, no implicit guarantees, which probably means slower development in certain years. But it seems to get us where we are, that, obviously you're compliant, then you will survive longer.
Grant, thank you so much for taking the time. Let's do this again, sir, again.
Thank you, David. Thank you.
Grant Pan there, of course, Noah Holdings CFO, joining us, of course, discussing the outlook for the sector. And also the company just released, of course, earnings very, very recently. Speaking of earnings and a profit warning, massive drop in shares of New World Development right now, 14% in the opening 11 minutes. We're now trading at, based on my Bloomberg terminal here, at the lowest level on record here for the stock. It's the worst day for the stock going back to November of last year. And I should also note the big picture here is the Hang Seng Property Index is effectively trading at the lowest level here since the global financial crisis. More on this story just ahead. This is Bloomberg. All right, the big story, the emerging story early this Monday in the Hong Kong session is this massive drop in property shares, 2.5% on the Hang Seng Property Index. We're trading at, I'm just checking my terminal now, 37% net liquidation value, or below half of book. The news, of course, is out of New World Development, and the profit warning, 19 to 20 billion, I think, is Hong Kong dollar loss, first loss in 2 decades. Shares are effectively trading at the lowest level on record here. What does this mean for the broader sector? If New World says this, might others actually follow suit in terms of this warning? Joining us here on set is Patrick Wong, our senior Asia-Pacific real estate analyst. When you saw this news, what was the first thing that went through your mind?
Yeah, I think that's a big surprise for everyone, especially, I think we all know, right, the home prices, office prices keep falling in Hong Kong. But the fact is that if we are talking about the asset write-down for New World, it's almost like 10 billion Hong Kong, right? That is sizable amount, right? And I think it's also partly because of some of the projects, like recently the Kai Tak projects for residential sales, the prices is much lower than previously people expected. So that's why we see the sizable write-down for that.
And what does it tell you about this whole deleveraging plan? Because that has been the concern in the market with New World, that they are
yeah, exactly. I think the challenge is that for the asset prices or the equity value, it's all coming down, right? So it's also impacting on the leverage ratio, right? When we see the ratios is already like close to 100%, so that is definitely we see the challenge. And if that keep going, right? If the asset price keep falling down, right, then it's also affect the further deleveraging going forward.
Should we expect the same, or to hear the same thing from other developers here in the city?
I think you could see more like kind of asset write-down happening in the second half. And the good thing is that for some of the developers, the leverage ratio is not that high. So potentially it's much better situation than what we see in New World.
All right, Patrick, thank you. Patrick Wong there, our senior Asia-Pacific real estate analyst from Bloomberg Intelligence. And obviously that brings a lot of questions about succession plans for New World and the like as well. We're taking a look at when it comes to this Caixin China manufacturing PMI. So yes, it was actually better than the previous month. So we're talking now about 50.4 and beating expectations of 50. So yes, this is a very different picture of what we're seeing when it comes to the official numbers. But then again, we've seen the disparities before, which one we should believe in. BE always says, look at the official numbers.
Look at the official numbers.
But that is the highest we've seen since June, that print. So yeah.
Well, it's Monday, so if our colleagues at BE are listening, for the meantime, I'll lean on the positive note here. 50.4, as you can see, that sequential pickup there. Let's have a look at banking stocks right now. So about 16 minutes into the session here. So some big earnings, of course, came through as we went into the weekends, and quite a sizable drop there too, right? So ICBC down about 3.4%. AgBank and Construction Bank reported as well to wrap up the week. Bank of China, of course, was, I think, about a day or two before that. Let's get a sense now of what this aggregate report card looks like with Francis Chan. Here with us on set, our Bloomberg Intelligence senior analyst. So now we have the complete cast of the Big Four. What do you make of the numbers?
Well, we do see the Big Four banks realize a bit more on loan growth. The loan growth has been better than the system growth in the first 2 quarters. But margins is another pain point. Obviously, some stabilization for the banks. But 1 or 2 banks like ICBC, we still see sequential decline, which is not a good sign. Coming out on Friday, we all know there's a piece of news from Bloomberg talking about our colleagues are citing the people with knowledge. Beijing is considering allowing the homeowners to refinance their mortgages at the concurrent rate. So that's another possible hurdle for the banks to revive their margins.
Tell us a bit more. You've been crunching the numbers a little bit. How much more pressure could we see on margins if in fact we see some sort of policy like this?
We don't have the exact number because we don't know the one-linked yield of the existing mortgage portfolio. But just give you some numbers for reference. Sure. As of July, the newly land mortgage rate in China averaged 3.4% according to the central bank. But from, for instance, September 21 to the end of 2022, we are talking about 4.1% to 5.7%. So that's a huge gap. If those mortgages can be refinanced at the concurrent rate, you can do the math yourself. And mortgages are accounting for about 1/5 of the loan book for the Big Four banks.
The other news in the banking system we want to ask you about is HSBC. So extremely busy news flow from late last week. First we had the Bloomberg scoop on the CEO who starts today in Hong Kong, and part of the plan was he was looking at parts of middle management and looking to maybe rationalize part of that.
Yes.
Nuno Matos, who's the global head, I believe, was the global head of wealth for HSBC, is no longer part of the bank. So what does the assignment look like for the new CEO as they embark on this new journey here?
Well, against the global macro backdrop, we all know that the Fed is going to cut rates, and rate cuts could be accelerated next year. So the revenue may become a bit more stagnant because of net interest income. And against this backdrop, 2 of his key tasks, according to my colleague Thomas, sitting in London, are to cut costs. Now we're seeing it now, not even before he starts his office. And second, it would be about to boost the non-interest income, which will be the wealth business. And it also somehow explains why he starts in Hong Kong, to talk to the people in Hong Kong. Hong Kong is basically HSBC's leading wealth hub, and China is another key growth market for his wealth business.
All right, Francis, thank you. Francis Chan there, Bloomberg Intelligence senior analyst who covers the banking sector for us. Also, we're checking HSBC shares. We're down just slightly, about 0.75% today.
Okay, let's check in on some of the other corporate stories we're tracking at this point. So Chinese automakers registered fewer electric cars across Europe in July. This is, I believe, sales, of course. That's as new tariffs, of course, amplify the impact of a broader slump in EV sales. You have researcher Dataforce says brands including BYD and SAIC Motor accounted for nearly 10% of EV registrations. That's down slightly compared to a year back. Now, new tariffs introduced in July raised duties on Chinese-made EVs to as high as 48%. Now, Chinese beverage heiress Kelly Zong Fu Li has been appointed as the chair of Hangzhou Wahaha Group. Now, Zong is the only child, of course, of the founder Zong Qingho, who died back in Feb. Now, a registration filing also lists her as the company's general manager and legal representative. She has spent 2 decades at the firm and became vice chair and general manager back in 2021. Okay, Intel may reportedly consider selling its programmable chip unit Altera as part of this cost-cutting plan here. Now, Reuters cites this, a source saying that the company is also considering capital spending cuts. That's confirmed, of course, a Friday report out of Bloomberg News. Now, our sources say other possibilities include a split of Intel's design and manufacturing businesses with options to be presented to a board meeting that takes place later this month. Right, lots moving in these equity markets as we awaken from our weekend slumber. And as you can see, we're slightly falling off bed in some ways here. Plenty more ahead. This is Bloomberg. All right, we're just about wrapping up earnings season, and some of the big names that came out, Longy Green drop as well. The firm reports, of course, losses on, well, that shouldn't come as any surprise given some of the capacity issues in the sector. ICBC has been trading at about these levels, of course, also following some earnings, also out of Construction Bank and Shenhua Energy down about 3.3% in the first 20 or so minutes. So on top of this, there's really a lot of drags contributing to this pullback we're seeing across markets, right? So apart from banks and energy, we're looking at property developers, we're looking at some of the car makers too. Casinos, we haven't even talked about this, and why don't we talk about them now? On the back of some numbers, of course, which came through, I think, going into the weekend or on the weekend itself, up 15% year on year, so slightly coming in above estimates. That arguably is your bright spot there amidst the sea of green, roughly speaking, across the benchmarks. Although keep in mind, Hang Seng has done extremely well of late, up 4 straight weeks going into Monday. The CSI 300 has again taken out the 3,300 level after quite a big rally, price rally, and also in terms of turnover and volumes to wrap up August. But the focus remains, and we'll talk more about this New World development.
Yeah, well, record low for the stock here right now. Coming up in the next hour, the CEO of healthcare services provider New Frontier joins us as we dive deep into China's demographic challenges amid Beijing's struggle to juice its economic engines. Welcome back to the China Show. Here's a look at the HSI, just a half hour into the session. And yeah, it's not looking too good for today. We've been kind of dealing with these PMI numbers have been weak. Yeah, weak earnings when it comes to some of these Chinese developers. That profit warning from New World, which is really sinking the property index here this morning, Dave. So really not much good news so far. No. And the weekend didn't help, right? Usually we take the weekend as a circuit breaker for bad news. What happened was we had really good news on Friday. The market rallied. Yes. You had this refinancing story coming out of Bloomberg. Some of these stocks were up 30% in some cases. We're giving up some, not all. We're down in the early goings on fairly heavy volumes right now as you catch up to a lot of news out in the weekend. It was a very immaculate weekend as far as weather goes in Hong Kong. So I hope you guys had some time for some outdoor stuff, maybe Disneyland or what have you. 12.5% down on New World development, so this should be the worst day for the stock since November of last year. We're record lows for the stock itself. Impairment and what this means for the broader sector as far as charges go. First full year loss that the company's warning of in over 2 decades from now. More on the story in a moment. The rest of the region, though, is we're coming off lows of the day, which is a good thing. So that's a good thing. So some of the early evil's been scared out of this market. So we're still down a quarter at 1%, but as you can see, some benchmarks are already trading higher, like the Nikkei, like the Kospi, like Taiwan. A couple of markets are shut, just to mention that too off the bat here, so you don't have Vietnam today. We have a long weekend in the U.S., of course, which is why we're looking at bond futures here on your screens. No cash treasuries. And also the Philippines is shut today because of the weather. There's a typhoon there, so no equity, and also no FX trading taking place there. Yep, quiet start to the week as we make our way into what's seasonally not a very good month for equity markets, September, and I think we have a jobs report coming out later. Yeah, so I think September is bad for stocks usually. We'll see what the dollar. Down. Yeah, and then you're heading into an election year in the U.S. So people say that might be more volatile than most right now. But what we've been really kind of trying to focus on is the PMI numbers that we got over the weekend in China, which continue to show that there's not much traction in this recovery. In fact, we're seeing a 4th straight month of contraction on the manufacturing floors. You take a look at how the sub-indices looked as well. I mean, you break it all down, it didn't look too good overall. New orders, I think that was what Goldman says was what decreased the most. Below 50 for the fourth straight month. Production sub-indices fell into contraction for the first time since February. And so now there are more calls that they need to do something more because that 5% growth target certainly seems to be in doubt now.
Yeah, we're slipping further away from that. I think 4.8% is the current trajectory for that. Although on the brighter side of things, the Caixin numbers, which is I guess a different sample size of companies, different sample pool, 50.4 coming in above estimates there as well. We talked about how, was it the weather? Partly it was when you look at the commentary coming out of officials there right now, but you look at how wide the weakness was across most parts and, new export orders, for example, to the new orders point Yvonne was making earlier on, does indicate, if you are looking at the soft landing narrative, that's your direct transmission effects. And our guys at Bloomberg Economics think the details from this show broad weakness in both supply and demand. So yes, the weather was a factor. It doesn't explain, based on their point, all of it as well. Right. I think we also spoke with Hao Hong earlier on, and he had some comments on this PMI numbers. Let's split it out, guys, please, if we can.
We're not seeing any inflationary pressure. I mean, if you look at the PMI index, in the sub-index, if you look at the output price part, it's actually firmly in a deflationary trend. So that is telling us that, something drastic needs to be done for the economy. I would even argue that, you don't have to see the number starting to improve for the economy to do better or for the confidence to come back. All you have to do, is to reinstill some of the confidence back into the economy. Let people see hope, how we resolve the housing problem and how we resolve the unemployment situation.
Well, for more markets, let's bring in our MLS strategist, Mark Cranfield. He's with us in Singapore. Mark, it's interesting because you talk about how, what risk assets have done. EM has actually done okay, given the backdrop that we're seeing Feds ready to cut. That certainly is helping to lift the EM complex, except for China in some ways. How do you see this continued weakness in the economy in the mainland likely to weigh when it comes to assets and risk assets overall?
It's certainly making it much easier for people just to exclude China. If you're a global investor and you've got money, you can deploy it pretty much anywhere around the globe. Obviously, the metrics in China and the fundamentals really are not favorable at all. So the equity market is probably going to take the brunt of this weakness. And if you think of some of the things which have just happened over the past few days, so at the end of last week, there was a story going around that China's going to try to increase this mortgage refinancing scheme to try and encourage people to take on new loans, which would probably be good for the consumer sector. But the background to that, you really need to have a vibrant secondary property market. You need prices to be rising to encourage people to go and refinance because there's a potential upside in property. And we've also seen data over the weekend which suggests that the prices in the secondary market are still on a downward path. And then you get the PMI data as well, which, as you said, is something like a fourth month of contraction in a row. So traders can see this. They can see that the data is just not stacking up, that it's really making it very difficult for them to form a positive view on what's happening in the Chinese market. And then on the other side, you've got the bond market where there's, as your guest said, there's no sign of inflation. In fact, if anything, there's concerns we could be going into deflation. So the bond market, which the central bank is trying to cool it down a bit, but how can you do that when investors have such few alternatives of where to put their money? So the bond market rally will probably continue. The curve will probably flatten a bit further. People will tend to ignore equities apart from occasional bumps when there's supposedly some very good news, but it doesn't seem to last very long. And then at the same time, you've got the currency, which is rebounding, but the central bank doesn't want it to be too strong because it needs to help the export sector. So you put all those pieces together, it's certainly hard for foreigners to get involved, and it probably means that the equity market is the safety valve in terms of going lower.
Well, Mark, let me play devil's advocate and say we have weekly options now available on the Hang Seng Tech Index. Might that help the case here?
Well, yes, in the sense that retail investors will probably love the idea of being able to short the market on a weekly basis, which is much more difficult to do on a longer term basis. So yeah, good luck with that, because all you're probably going to do is encourage people who have a very short-term view, and at the moment most of those short-term views are negative, you're probably going to encourage them to put some money to work and say, well, by the end of this week I can predict that stocks will be down 1 or 2%, and off you go. So I suspect volumes will be very good, but they might not get the outcome that they're hoping for. It's not, it's not likely to actually change the direction of the market in the near term.
What could change the direction of the market this week, Mark? Could be this jobs report coming out of the U.S. It's been a while since we've been so focused on data. Now that we've gone past the NVIDIA earnings, we've gone past the PC inflation gauge last week without much of a hitch. What's in store this week, you think, Mark?
Yeah, obviously the US jobs report on a global basis is by far the most important information we're going to get this week, and it follows the PCE report that we had at the end of last week. And what it suggests is that the Fed is certainly, they've got the room to be able to cut by 25 basis points, but probably not more than that. Bloomberg economics think that the unemployment rate will only tick up to 4.34 from 4.3%. That's not really enough for the Federal Reserve to justify 50 basis points. And traders are beginning to see that. You can see a little bit of weakness coming into the Treasury market now. It could well be a bit of a reality check. The equity market in the US has probably got ahead of itself to some extent. If you look at the way the derivative curve is pricing for something like up to 200 basis points of interest rate cuts over the next 18 months. And the Fed will probably take the opportunity to push back a bit. And investors may not like it too much, particularly people know that September is usually a tricky month for US equities. It has more down months than usual. If the Fed tells you, yes, we're going to cut rates, but we're not going to do it every month you expect us to do so, it's going to be a gradual process. And we're not even sure that inflation has fully bottomed. There are definitely signs. Simon White on Markets Live in London, he was writing about there are concerns that inflation could start to tick up again. Services numbers are starting to push the other way. So we may be seeing a dip in inflation, but it doesn't mean to say it's on a one-way trend. It could start to come back and bite the Federal Reserve in the next few months. So put all that together, it's going to be very hard for the Federal Reserve to justify rate cuts every period they meet for the next 18 months, and investors may get a bit of a reality check later this month.
Mark, thank you. Mark Cranfield there, our MLive strategist in Singapore for us. Let's turn our attention right now to the Chinese housing data which came out, and the slump that really, when you look at the numbers, deepened in the month of August. Expectations there of a further drop in new home prices certainly hampered efforts to, at least in some ways, offset this downturn. Let's bring in Christy Hung, our Bloomberg Intelligence Asia real estate analyst, with us here. Just to talk us through your initial thoughts when you saw that drop for August.
Right, so August sales down another 27%. That's a surprise because August 2023 was a very low base. That was in the middle of Country Garden's crisis. I think what the numbers are telling us is that policy-wise, we're probably at a dead end because in mid-May, we already had unprecedented easing measures. Down payment and mortgage rates are at record low. Most cities removed their home purchase quotas. Yet the boost to home sales failed to extend beyond June. And looking at the number, we had expected home sales for the top 100 developers in China to be down for over, 20% in 2024. But at this rate, I think we're going to end up with something much worse than that.
And we're seeing this really being weighed by what we saw in China Wanke's earnings, right? When you're talking about swinging to a loss for the first half of 9.85 billion renminbi, what does it tell you about the liquidity situation and the financials right now?
Yes, so we think that if the sales slump is going to persist, it could endanger its solvency in 2025 to 2026. I think what is worrying is that if you look at Wanke's result, short-term debt shot up by 62%, which means that it's struggling to extend debt, and at the same time, its cash pile is shrinking. There's also plans for asset disposal, but we're expecting hurdles for that. It has been trying to offload its stakes in GLP, which is the largest logistics operator. But from this investment, it's posting 1 billion yuan loss on its P&L alone. So I think offloading and finding a buy at this point would be very difficult given the downturn in China's logistics industry at the moment.
Now, we're getting more offsetting measures, and hopefully that could change of the direction. So I think in Chongqing, for example, these new measures, there are also some moves to further lower the mortgage rates for existing mortgages. How do you think all these help?
Yeah, so improving mortgage affordability is going to help households, especially those who are struggling with pay cuts or job losses in the family. But that being said, as long as the expectation is for home prices to go down, I think more homeowners are going to head for the exit and try and offload a property, which means that there will still be heavy supply in the second-hand market in China. And we're going to see more piecemeal measures to support the housing market in China, but that still is not going to offset the difficulties from, unfinished homes in China, as well as fear of job losses, pay cut, and also further home price decline, which means that turnaround in the housing market is not going to be easy.
What did you make of that Bloomberg scoop that we had on Friday about measures to refinance mortgages right now? I mean, do you think those measures are enough to actually take us out of this slump?
Yeah, so I think that with lower interest rate for existing mortgages, people who might have been forced to sell because they couldn't afford the mortgages might be stopping and giving it a rethink at the moment. But that being said, if households are mainly still thinking about home prices are going to go down, they will still likely to try and offload their investments, which means that second-hand home supply in China will still be heavy, and that's on top of a lot of new home supply. And that means that restoring supply-demand imbalance in China is not going to come easily. That could hint at, more home price pressure in the near term.
All right, Christy, thank you. Christy Hung there, our Bloomberg Intelligence Asia banking and real estate analyst. Still ahead on the China Show, the latest collision between Chinese and Philippine Coast Guard ships in the South China Sea as each side blames the other. We have details coming up next. This is Bloomberg.
Welcome back. Let's get you the latest on this Israel story here. So the largest labor group is actually poised for a nationwide strike today, Monday. It's the strongest push yet to force the government into a ceasefire deal with Gaza, and really what looks to be the largest protest since October. And hundreds of thousands of Israelis, as you can see, demonstrated in cities around the nation on Sunday. That's after the bodies of 6 hostages were found in a tunnel in the Gaza Strip over the weekend. Jill Deeses, our news desk editor, is with us right now. Let's talk about the details. Any details we know about this planned strike today?
Yeah, so David, at this point, I mean, as you said, this is really kind of a really major escalation in these pushes for some kind of a ceasefire deal within Israel. You've got obviously hundreds of thousands of Israelis protesting over the weekend. Now, the actual planned strike, it seems, would incorporate not just some government agencies, but also some businesses. While the stock exchange is poised to remain open, we're looking at potential closure nationwide of universities, post offices, maybe some banks. I mean, this is really, at this point, representing a very, very serious escalation in the number of Israelis that really want a ceasefire deal done. I mean, look, when you've got the bodies of these hostages found over the weekend, I mean, it's been 11 months since this conflict first really kicked off last October 7th. You had hundreds of people taken hostage. Obviously, some have been released, but the fact that you've got these people killed found in this tunnel in Gaza who had just been killed within the last 24 to 48 hours, according to medical examiners, really kind of emphasizes that idea of this massive amount of pain and frustrations that's really felt here, and this growing desire to really put pressure on Netanyahu to get something done.
And we heard from Netanyahu in a statement saying those who murder hostages do not want a deal. I want to play a clip of what he also said, really refusing to soften his tack on these negotiations.
Even after the United States updated the outline of the deal on August 16th, we agreed, and Hamas again refused. These days, while Israel is conducting intensive negotiations with the mediators in a supreme effort to reach a deal, Hamas continues to firmly refuse any proposal.
He doesn't seem to be budging, but as you say, public pressure is mounting on Netanyahu right now. Is that going to change anything?
Yeah, it's really difficult to say, Yvonne, because yes, as you said, I mean, I think that at this point, Netanyahu has been, pretty clear, kind of, stuck in his ways here. I mean, one of the big, developments that has become a real sticking point is this idea that he wants Israeli troops sort of stationed between Gaza and Egypt. That's obviously something that, there's been some debate over whether or not that would be a major sticking point for Hamas to reach a ceasefire. I mean, look, like when you've got other Israeli allies like the United States really, really pushing for a deal, I mean, the U.S. at this point is pretty desperate to try to find some kind of common ground here to reach a ceasefire deal. You had the Biden administration saying over the weekend that they think that they're fairly close. It's kind of difficult to see where things come out from the Hamas side. The last time we really had any substantive talks was about a week ago in Cairo, but there wasn't anything meaningful that kind of came out of here. It's tough to say whether or not something would actually, sort of galvanize Netanyahu to make a deal, because obviously he's been making the point that if they push toward a ceasefire, maybe that actually enables and rearms Hamas in some other ways to kind of create the potential for additional hostage taking in the future. Really difficult to see where that goes from here, but we'll have to see how these strikes unfold this week.
Okay, Jill, thank you so much. Jill Deesister, our news desk editor. Back here closer to this part of the world, of course, in case you missed it over the weekend, China and the Philippines are trading blame over the most recent ship collision in the South China Sea. Coast Guard vessels from the two nations hit each other on Saturday, further ratcheting up tensions in these disputed waters. Let's bring in Cliff Venson, our reporter in Manila, to talk us through. Cliff, what exactly happened here?
Yeah, that's right, David. So this latest incident, this incident is the latest in a series of recent clashes in the South China Sea. This time it happened near Sabina Shoal in the Spratly region. Both sides are blaming each other for the collision. According to the Philippine government, the Chinese Coast Guard vessel hit a Philippine Coast Guard vessel 3 times, which damaged the ship and endangered the lives of Filipino personnel.
You mentioned Sabina Shoal. Why do you think this area is becoming a new flashpoint in these two nations' maritime disputes?
Yeah, so a bit of background. The Philippines in mid-April deployed this Philippine patrol boat called BRP Teresa Magbanwa, and the purpose is to monitor Chinese activities in Sabina Shoal, including suspected reclamation activities. However, the Chinese side said that the Philippines is actually seeking a long-term presence in the area. The clashes took place in recent weeks. So following this latest incident, the Chinese government has called on the Philippines to withdraw the ship from Sabina Shoal. However, the Philippine side said BRP Teresa Magbanwa will continue to operate in what it calls the West Philippine Sea, and it will not yield to harassment and aggressive behavior.
Cliff, how have we, so that we know both, well, the versions from both sides. How is the international community reacting here? What have we heard?
Yeah, so the international community has reacted quite strongly to this latest incident. The European Union condemned what it calls dangerous actions by the Chinese Coast Guard. That concern was also echoed by Japan, Australia, and the UK. And also, meanwhile, the United States, an ally of the Philippines, has said that the Chinese actions were escalatory, and at the same time, it's reiterated that its mutual defense treaty with the Philippines extends to armed attack on Philippine vessels, including those of Coast Guard, anywhere in the South China Sea.
Cliff, thank you. Cliff Venson there, our Manila reporter, with the latest on what we've been seeing there. We got plenty more ahead. This is Bloomberg. All right. We're watching New World shares.
Yeah.
Continue to see that decline here, close to 13%. This is, of course, warning of that full-year net loss, the first time we've seen one, if in fact this is what it leads to in about 2 decades or so. So really been weighed down by what these write-downs could look like in some of these property assets that they have. So certainly that's leading to the whole sector to kind of be in declines here. China Wanka also reporting some pretty bad results for the first half also. So stock they're down some 3%. Yeah, I think the Vanco results actually swung from almost the opposite profit figure in absolute terms from last year to this year. In terms of some of the earnings fallout we're still seeing as well, so ICBC and the like have reported earnings going into the weekend, and we did see some bit on the softer side, and as you can see, the stock is reflecting some of the softness there, although at 3% down, we are coming off lows of the day on ICBC. Agbank, though, was somewhat of a standout if you compare that, relatively speaking, to that comparative pool within the sector itself, and the stock, as you can see, is also reflecting that in the first hour of the session here. Speaking of earnings, very, very quickly here, we'll end things with one of the toothpaste makers, a big one, Guangzhou Pharma, Baiyunshan Pharma here. So stock is down 6%. First half profit declines also on the back of softer earnings there. And still ahead, we'll be diving into China's demographic challenges. Healthcare services provider New Frontier joins us next. .29 a.m. in Tokyo. Japanese markets heading to that lunch break. It's pretty quiet out there in Tokyo here this morning. Nikkei 225. We're only seeing upside about a fifth of 1%, but still doing a little bit better than some markets here in Asia today. Topics is unchanged. Not much movement in the yen either this morning, Dave. Okay, well, you leave me with nothing else to say there. Well, half of 1% to the downside here. I mean, the drag is really we're coming from the over 1% drop we're getting here in benchmarks in Hong Kong following the pop we had on Friday. S&P futures, it's a long weekend there, of course, just keep that in mind. Most sector groups are lower going into, well, historically, when you look at MSCI All Country, the last 30 years of data suggests September is either very, very volatile or a bad month in absolute terms. So overall, we're down about 1% on average for the month of September. So you do understand, of course, the pause before the Santa Claus rally, which I guess we can worry about, but we still have elections coming through as well. Right, now, away from markets right now for a closer look at another sector that impacts the Chinese economy, really in a very big way, demographics. So check out this chart from the United Nations documenting the changes to the population pyramid over the last 70 years or so. And of course, as you scroll down and as you look at that change, you do understand that the bottom part representing those age 30 and below, while the top actually tracks those above the age of 65. And as you can see, the younger population has been in decline all the way since the 1990s. Yeah, let's get to our China correspondent, Min Lo, to set us up all of this. Obviously, we've been talking about the shrinking population. Can it actually avoid what we saw in Japan in this last decade? What are you seeing right now?
Yeah, when I was reporting in China and I would travel to different parts of China, I would often come across these villages where you'd see clusters of elderly people hanging around, and the average age would be above 60 years old. And I would pass by these schools that are just empty shells. They were just abandoned for years because there are no longer any young kids left to be educated. And I think this is quite emblematic of the aging population that we're seeing in China. You have a generation of young people, they're all moving to the cities to get better jobs, and it's probably the first generation that may see their lives not being better off than their parents. So they're more focused on improving their quality of lives and less so much on marriage and childbirth. So marriage rates this year, first half of the year, it was down over 12% year on year. Last year was already at record low, and birth rates the last 2 consecutive years were record lows as well. India has surpassed China in being the most populous nation on earth. So this trend is it doesn't look like it's going to reverse anytime soon, despite the government rolling out all these measures. And President Xi last year calling on women to do a better job to create this childbearing and marriage culture, then that really kicked up a fuss on social media as well.
All right, let's have more of this. I want to bring in our special guest now, Carl Wu, co-founder and CEO at New Frontier Group and CEO of United Family Healthcare. And Carl, it's great to have you on the show. I mean, it's easy to put parallels to what we saw in Japan, but this is a nation that seems to be getting old before it gets rich as well. How long-lasting are these democratic challenges, you think, and are they reversible?
We expect this trend to stay with us for the long term. As you can see from the stats, China is expected to add approximately 250 million senior population over the next 30 years. So that's a very significant challenge. And the implication of that for the healthcare sector is huge. As you know, aging population adds to what we call disease burden because most diseases and conditions are related to age. Cancer, cardiovascular conditions, plus the fact that there's huge number of senior people, and behind that, there requires a significant infrastructure for senior care as well as rehabilitation care. On the flip side, obviously there's significant challenges on healthcare financing as well as supply of labor that's required to service this significant challenge. So it's a huge opportunity as well as a significant challenge for the country.
Yeah, Carl, talk to us about David here, by the way, about the opportunity here and also what you're seeing from the government on the ground as far as support for the private sector, like for companies like yourself.
Sure. So we are an integrated healthcare system, and under our system we run a chain of hospitals, 11 international hospitals across China. We also operate 22 hospitals in rehabilitation health, and by rehabilitation health it means providing care for patients in critical conditions. A lot of them are age-related conditions. We also provide home health services, which means taking senior cares to homes of the patients, as well as health insurance services across the country. And it is a huge opportunity across the nation. The government is very supportive of us, and we're investing in a few areas. So, for example, adding a lot of infrastructure. Just in the last quarter, we opened our third hospital here in Shanghai, our fourth hospital in Beijing. We've also opened our largest hospital in the group yet to date in the Greater Bay Area in downtown Shenzhen, as well as on top of the recent ones in Guangzhou. We've also heavily invested in cancer care, which is very much a age-related condition. So we've acquired the Integrated Oncology Center in Hong Kong, which makes us the largest private cancer provider across private in the Greater Bay Area. We've also built now 22 rehab hospitals across the country. On the home health side, we're investing a lot of technology in what we call digital home. So today we service approximately 60 to 100,000 daily service patients to the homes of the patients.
Yeah, can you tell us a little bit more? I mean, we talked about the government has been pressuring, the private sector to build more infrastructure, as you say. And we certainly have seen that. Do you think it's likely that you guys will be able to fill in that gap that maybe some of these local governments cannot at the moment? Because some of your other peers have said, when it comes to some of these homes, they're quite costly to start, and it takes some time to really turn a profit. So how much investment are you really seeing in that space now?
So this is obviously the significance or the scale of the challenge is not something that one company could solve. However, I think the public sector and the private sectors are working very closely to make this happen. So, for example, there's a lot of innovation that's happening in health financing. So, for example, as you know, China is financed by what we call the basic medical insurance that provides a significant part of the care for patients in China. In recent years, we launched Prosper Health, which essentially is a supplementary health insurance solutions company that provides supplementary financing on top of the basic medical insurance. For example, on the digital home side, as you know, the government is very much focused on building large infrastructures, but when it comes to innovation, they work closely with the private sector. So, for example, now that we do about almost 100,000 daily visits to home, but the next wave of innovation where we're pushing is is to try to create digital connections to patients at home, including health data, activity data that allows us to do chronic disease management remotely. And this is cheaper care, better access care, and better outcome. We're also working with the government to develop AI-based solutions, using AI to do reimbursement and scheduling, using AI to help our doctors on what we call co-pilot, medical record preparation, and many other things that will improve efficiency as well as outcome for the patients. And further on training. So, one of the biggest challenges that we'll face is the supply of skilled laborers.
Yeah, Carl, I think one of the new trends I've been noticing in the past few years is these insurance companies are really bundling their insurance products and elderly care facilities. So they are taking the funds collected from the insurance to invest in elder care facilities, and they're giving the insurance holders a chance to stay in those facilities, enjoy financial services and rehabilitation services. So maybe you can comment a little bit about how big is this trend. And also I'm curious, I don't know if you can answer this, but right now I believe the average pension that people are getting is about 3,000 plus yuan, a few hundred US dollars really. So I don't know, the people that are paying for these services, is their money mainly coming from their savings or their kids' income? And really how much disposable income does the silver generation really have to spend on these services that the government is trying to boost?
Oh, those are very, very good questions. So maybe firstly on the insurance model. So the way we see aged care, we try to actually segment that into a few different parts. So the insurance model, which is largely what we call senior community, and this is largely focused on old people, but they can care for themselves, so they're relatively healthy. However, during the aging process, the demand is multilateral. So you have people that, for example, want to stay at home, and as you probably hear recently across the globe, hospitalization or home-based care is a very effective means to care for an even greater group of people at home. So I think this is an area where a lot of innovation and where our group is focused on that supplements the senior community. Further, rehabilitation health, which is another segment of senior care, is very much focused on the health side, which also supplements the senior communities. But that focus on caring for patients that perhaps are in critical conditions, who are in high dependency units, or for example, those that went through stroke or neuro surgery that requires professional rehabilitation care. So the way we see it is that it has to be multilateral in terms of the form or the format of the services. I think secondly, in terms of health financing, that's obviously a much broader topic. However, today, as you know, the way healthcare is funded in China is that approximately half of that is funded by the basic medical insurance, and the other half is out of pocket. And both of which is significant burden. Ideally, you want the out-of-pocket portion to be in the 20-30% range, so that people are more willing to spend their money and willing to invest for the next generation and have a bit of saving for disposable spending. However, obviously, this would be too much pressure for the basic medical insurance because the way the basic medical insurance works is you have the working population that funds into it, and you have the retirees that draws from it. And what we foresee in the future is innovation in commercial health insurance, specialized care products that push people and employees to invest early in their life, and those specialized care insurance products will supplement to the care and help diversify the burden on the basic medical insurance.
Carl, just very, very quickly, fertility, I think you guys run, correct me if I'm wrong, 2 centers across China. Are you seeing demand pick up?
Absolutely. We actually run 33 hospitals across the country, as well as our home health services. So in terms of demand, so we're seeing outpatient volume on a like-for-like basis increase by about 20 to 25% this year. Our home visits has increased by 30% organic, and a lot of those are 60-plus population. Our insurance premium has increased by about 15 to 20%, depending on region, and our inpatient is about 25% increase year on year. So quite significant increase.
Yeah. Talk about the potential growth in that, because right now in China, I believe single women or women that are in non-hetero relationships are not allowed to get IVF, for example. And you're hearing a lot of stories about women going to Taiwan, going to the U.S. to seek IVF. I'm just wondering, if the government allows for this to happen, do you think that could be a pretty big potential growth area for you guys?
Sure. IVF is legal in China, and there's significant demand. I think by restrictions, I think it's only in terms of gender selection and surrogacy, which were are prohibited in China. But IVF itself is legal, and we run IVF centers across the country, as well as recently, actually, we launched our IVF center in Hong Kong that provides a bit more flexibility. So absolutely huge demand, and you're also seeing recent announcement from different provincial governments that actually pays for IVF services now. Some of the governments are including that as part of their reimbursement. So I think the demand is here. Obviously, aside from medical factors, there's also economic as well as personal factors that also come to play when it comes to having kids.
Yep, you just have to be married. All right, Darryl, thank you. Carl Wu there, co-founder and CEO at New Frontier Group and CEO of United Family Healthcare. Also, our thanks to our Min Lo, our China correspondent. If you are a Bloomberg subscriber, you can catch up with all our interviews by using our interactive function TV Go. You can also join the conversation, send us instant messages to our team and our guests during our live shows. Make sure to check it out at TV Go. This is Bloomberg. All right, starting today, investors have a new way to bet on some of the most watched Hong Kong stocks. The City Exchange is launching weekly options on the Hang Seng Tech Index, which tracks stocks including Alibaba and JD.com that also trade in the U.S. Let's get to our Asia stocks reporter, Sang-Mi Cha, joining us now. We don't really understand what this means, but explain to us about these weekly options.
Definitely. I had to do a lot of studying for this as well. But basically, when we start with the index itself, the Hang Seng Tech Index has been quite popular recently, right, with a lot of the e-commerce giants in there and the EVs. So it's lost about 7% this year, though. So that's quite of a gap between the Hang Seng Index, which is gaining about 4%. So you see that gap. And that's obviously because last week, remember, PDD actually dragged down a lot of the e-commerce peers, even though PDD itself is not in the Hang Seng Tech Index. And so this weekly derivatives is basically shorter duration. When we talk about options, we usually have longer term maturity, but then this is shorter term. So this is actually good because the upfront premium is cheaper for the investor. So it's very popular in the U.S. So U.S. actually started offering weekly derivatives in 2005, whereas in Hong Kong, we see HKEX started doing that in 2019 for Hang Seng Index and HSCEI, which is the list of the Chinese stocks that's listed in Hong Kong, right? And they have been doing absolutely great. We've been seeing these numbers just go rise. And this year, the open interest levels for these two weekly derivatives has hit a record. And so it's just going up constantly. But then we have to remember that these two are actually accounting for just 2% of the entire options trading. So it's not a big chunk, but it's still giving options for investors when they want to maneuver around a lot of the other products that they have.
Yeah, at least it's an option.
Yes.
In that sense. What else is in focus this week?
Yes, we're definitely watching New World after quite big slump here. And we have been looking at the property stocks as well after a lot of the Friday and weekends data from China. But everything is quite falling right now. So, and a lot of the banks are still reporting earnings this week. So we're watching them very closely.
Sang-Mi Cha, our Asia stocks reporter. Thank you so much for getting us warmed up for the week. In other news that we're following this morning, Chinese automakers registering fewer electric cars across Europe in July. That's as new tariffs, of course, amplify the impact of a broader slump in EV sales. Dataforce, that's a researcher, says that brands including BYD and SAIC Motor accounted for nearly 10% of EV registrations. That's down slightly compared to a year back. Now, new tariffs introduced in July raised those tariffs on Chinese-made EVs to as high as 48%.
Goldman Sachs is said to be planning to dismiss several hundred employees in coming weeks as part of its annual cull of low-performing staff. Sources say that would bring total cuts this year to around 3 to 4% of the bank's workforce. And that's in line with Goldman's typical approach as it seeks to keep a lid on costs and make room to enlist new talent. We got plenty more ahead. This is Bloomberg.
Right, so this week we have the latest episode of the Tiger Money podcast dropping, and this week's episode features one of the best-known or well-known analysts in China, of course, Grow Investment Group partner and chief economist who joined us, in fact, also today, Hao Hong. And among the topics we covered in our wide-ranging discussion is why he always wears a red tie.
Red is an auspicious color in the Chinese culture. So in the Chinese New Year, you hang out this red color stuff, you hand out red packets to your kids, and you send out red envelopes to your moms as well. I think red is auspicious. In the Chinese stock market, it's a symbol for rising stock price.
Right.
So I always choose to wear a red tie.
That's actually that's a good point. People don't know that. Red actually means up when you look at charts in China, right? Okay, Hao, you said you're not going to endorse any brand, but I think you'll make an exception to this next question. You mentioned red, right?
Yes.
The finest red wine or the finest Chinese liquor?
There's no competition. Especially the 50-year-old Mao Tai. 50-year-old Mao Tai.
What's special about
it? So smooth. And also, like, if you can, so when you drink, you can put a little bit of saffron in your wine glasses, and then the wine would change into a deep sort of crimson, chocolatey, caramelish color, and then you had a sip, it has a saffron flavor and a 50-year-old yeast that is melting in your mouth. It's just phenomenal. I think, after a very long day, you light up a cigar and then you have, one of those, it would, make your day complete.
Wow. Wide-ranging is. I would have followed up. Okay, yes, the tie. Chinese people, when they play mahjong, they wear the underwear too. You should have followed up on that.
I didn't want to get there.
But look at him just blooming when he talks about liquor. It's great. I love to see that side of him.
Yeah, well, we've had our sessions too.
Oh, yeah.
Yes. And we can really see.
He is an expert.
Yeah, he loves it. Absolutely loves
All right, you can catch a full episode of Tiger Money from tomorrow on Bloomberg.com, Apple, Spotify, and YouTube. We got new episodes dropping every second Tuesday.
Well, speaking of red, on your screens very, very shortly. Before that, though, and some of the to the opposite end of things, some of these EV battery stocks substantially higher over in South Korea, 15% in some cases. They're on the back of, I guess, some of these upgrades coming out of Morgan Stanley as they look at companies like Tesla, for example. Alibaba, very, very quickly change up on your screens here. Of course, some reports here out of CCTV, and of course, finally, after this years-long correction, if you will.
Yes.
An endorsement here from the antitrust watchdog that, I think some of the I forgot what the term is basically, that Alibaba has put in place to look at its business has, you guys have done a good job.
They've ceased the monopolistic practices
there we go.
that prompted that investigation.
It was a bit too long
so, yes, a sign of support there from Beijing. Not much in terms of the stock here this morning. We're still seeing it on a downward trajectory. But yes, you're taking a look at iron ore. Really been weighed down by that PMI data that we got out of over the weekend. There you go, 3% declines in Dalian as well as in Singapore, back below $100, in fact, for the futures in the Lion City. Aluminum, it's bringing down steel as well this morning. What also was brought down slightly was
websites, servers.
For all you Oasis fans out there, I heard your pain. That took a while to get some tickets.
Yeah.
But some were able to get it still.
Very successfully so. So congratulations to those who were patient enough. That surge in pricing on Oasis tickets. Can the Fed still cut rates with that inflation coming through?